This segment sponsored by Foster Financial. Welcome back to Women's Wealth Wednesday with Foster Financial, where they give specific advice for women and their financial needs. And joining me today is Caleb Dohm, the Vice President. Good morning, Caleb.
Good morning.
How are you?
I'm doing well. How are you doing?
Good, doing good. And I'm excited about this topic because we've been talking about spousal inheritance planning.
Yeah.
And I know that we've covered IRAs, brokerage, and last time, pensions.
Yeah.
So what will we discuss today?
Yeah. So today we'll talk a little bit about life insurance policies. Okay. So this is another, pretty common account for people to have, maybe slightly less common the older that you get. A lot of times people have life insurance in their working years. Typically the older that you get, that insurance that you had through work has dropped off. And you might have a whole life insurance policy or something like that lasts over the course of your life. And so again, we're kind of expecting this big wealth transfer as kind of that baby boomer generation. Most of them are retired right now, and some of them are even getting towards the later years of their retirement. And so we're seeing, unfortunately, the shift where if a spouse passes away, there's money being left to the widow in the circumstance or the surviving spouse.
Right.
And so there's just a lot of decisions that have to get made at that point in time, and what to do with life insurance is certainly one of them. And it's actually one of the easier accounts to inherit. There's kind of less rules around it.
Yeah, because I was going to say that, and I feel like it's the most popular account to have, right? So someone may have a pension or not, depending on their job. They may have an extra retirement account or not, depending on how much wealth they've been able to bring in over their lives. But a lot of people really do lock down that life insurance. The premium is, moderate to pay each month, and then the payout, of course, it can be pretty large. And so what happens if a spouse does lose their husband and they now get to inherit the life insurance? What happens?
Yeah, so importantly, a life insurance policy, it's not going to feed through the will, okay? So a life insurance policy has direct beneficiaries listed, and of course, in the vast majority of those situations, spouses are listing each other on those. So if a wife is listed as the 100% primary beneficiary, if her husband passes away and he had that life insurance policy, basically you reach out to the insurance company, you fill out a form, you send them the death certificate, and then you get that death benefit that's associated with the policy. Typically, like I said, when people are in their later years, it's a whole life insurance policy that they have. Whereas, term is it just lasts for a certain number of years. Whole life policy lasts your entire life. Typically, the whole life policies have a lower death benefit than what the term policies do. So, maybe basically because a whole life policy, it lasts your entire life. The insurance company knows, most of the time they're going to have to pay it out. And so basically you can't get as much coverage for the same premium. So, it's common for people to have a $10,000 life insurance policy, a $50,000 whole life policy. It's a lot less common to have a $1 million whole life insurance policy that a spouse is going to be inheriting, especially if you're in your later years in retirement. So the important thing is the death benefit comes completely tax-free as well. So it's not like this weird scenario where you have to plan on taking a certain amount each year for a certain number of years. You just get that entire life insurance policy. You don't have to worry about it impacting your taxes. The main decision process from then on is, what are you actually going to do with that life insurance policy?
Right, because then it's like you get that lump sum, and like you said, it could come from multiple resources, really, if you have one at your job, or if you have a personal one, and et cetera. What should someone do? Should they save it? Should they invest it? Should they, pay off all their debt, clearly, if they have any?
Right. Yeah, it of course depends on the person, but a lot of the kind of big first steps to take, one would, of course, be covering the cost of the funeral and things like that. A lot of times people might even have money set aside ahead of time that they're planning for that, but that can be, of course, a good thing to do with the money. Paying off any high interest debt is certainly another thing. Sometimes people are maybe maybe too ambitious to pay off the mortgage, especially if it's a really low interest rate mortgage. Sometimes that might be lower on our priority list than other things. So maybe it makes sense to actually keep the mortgage for a little bit, of course, depending on the situation.
Yeah.
Another thing that we commonly see, if a spouse passes away, maybe the surviving spouse needs to make the home a little bit more accessible for them. Maybe they're kind of need to spend some money on redoing the bathroom to make it a little more accessible for them to get in and out of the shower, the tub, or whatever it is. Those are kind of some of the key things that we look at. And of course, any excess on top of that, we say, all right, as investment advisors, is there a way that we can invest this for you to generate the income now that you're going to need? Because again, they're probably losing some income from lost Social Security from their spouse passing away.
And so do you ever see people set up just an account that they can get their own type of distribution for just monthly bills out of it?
Absolutely, yeah. That's probably one of the most popular things that we do in this scenario. When somebody, they get $100,000, they need to spend, 20 grand on different expenses that they have, and they say, here's $80,000. I need this to generate income for me because there's been some Social Security that's been lost. We'll invest it in a certain way and say, hey, we're going to send you $1,000 a month or something like that. For the rest of your life, you're going to be able to live off of the generation of interest and dividends from this account. So there's just so many decisions to kind of make when this process happens. Trying to find a financial advisor at that time is probably not something you want to be focusing on. So trying to find a financial advisor ahead of time who's a fiduciary, who you trust, who you think is going to act in your best interest, taking care of that stuff ahead of time is going to be really helpful so that if and when that time comes, there's somebody that you can trust who can help set these things up for you.
Yeah, absolutely. Really good point there. Yeah, do it ahead. Get on top of it.
Yeah, certainly.
All right, thank you so much, Caleb. And if you would like more information about Foster Financial, we'll have their phone number listed below. You can give them a call and start having this conversation and planning in advance. And I'll see you after the break. This segment sponsored by Foster Financial.